Hey, friends, welcome to the webinar for Stratus Financial. I'm Senate Eskridge, and I am super excited to be here with all of you today. We've got a lot to talk about, but first I want to welcome some of our guests that are popping in here from all over the country. Wow. I've got somebody here from California that's joined us. Three or four people from Idaho. Hey, Idaho friends, that's where I live. So it's always nice to see you guys local here. There's a couple from Texas I recognize on here. Oh, wow. We've got one from Florida. Shoot. There's one that's even across the pond. A friend of mine from England. Man, it must be late there. You should have caught the recording, man. I'm honored that you're here. I'm not sure exactly what time it is, but I know it's pretty late over there right now. So, you guys, I'm so excited to talk to you about this opportunity today, Stratus Financial. This is a great debt fund that pays monthly dividends starting day one directly to each of you, the investor. But before we dive in, we got to do the standard disclaimer slides. I am not a lawyer, I'm not a CPA and or financial advisor, and I'm sure as heck not your CPA, lawyer, or financial advisor. So you've got to make your own investment decisions here. Carefully read the PPM. This is not an offering to sell securities. You've got to go through the portal and read all the documents and make your own decision when it comes to the investments. So I want to tell you what I think is the most important thing first. I'm going to start with the who's running this deal and what the returns are. And honestly, in my opinion, these two slides are the most important thing when you make your decision here today. So first, who am I? Who's this guy, Senate Eskridge, that all of you guys signed on to this webinar to hear from? You guys, I've been in real estate since 2009, over 15 years now, and helping people invest for a very, very long time. I'm a formal financial advisor with all the securities licenses, things of that nature. But what I do today is I help people just like you get access to amazing deals like the one we're going to talk about today. Technically, I'm what they call a fund of fund manager, and I have tons of friends like Brandon here that we're going to talk about in a minute that have great investment opportunities. And my job is to bring those out to you after doing due diligence on them to make sure that they're as good as everyone says that they are. And finally, to get you that access. And then I become your investor relations person throughout the length of this deal. That's what I do. The real magic here is with Brandon and the rest of his team. So I've known Brandon for 3 years now, and I've been following along this fund and its track record that whole time and vetting it for over 3 years before I bring it out to you. Brandon, as I mentioned, a good friend of mine, he has owned and exited two flight schools before, FAA approved flight schools. He's a commercial pilot and a flight instructor. So, you guys, he knows this business super, super well. I couldn't imagine a better person to be running this fund than Brandon Martini. Trust him implicitly, and he knows the business. And he brings in amazing people like Aloyna here. She's the managing director. Basically, she's in charge of all operations. And that's exactly what her experience has been in the past. You can see here from her bio, just short here, she was the VP at Citi Private Bank and a former private client banker at JP Morgan Chase. She has helped tons and tons of people get loans exactly like this. She's worked on the back end, the front end. She knows this business inside and out. And you guys, when you're vetting a deal, in my opinion, the operators, the people that are actually running the deal, are the most important factor when making a decision. These people are studs, and I'm very, very excited to be in business with them. So, what are you going to get if you invest in this? We're going to talk about that next, the returns. And then the rest of this presentation, after we talk about the returns, is all about risk mitigation. You guys, going back one more slide, you got the people, and here are the returns. So, this investment pays 16% cash on cash paid out monthly, starting pretty much day one. There's going to be a little bit of a delay here as you guys send me money and I send it to them and all that kind of stuff. I would guess you should see your payments first part of August, I'm thinking. Slim chance, maybe 1st of September, but very, very quick, you're going to start getting those first monthly cash flows directly to you. Now, down at the bottom, there's a couple of examples of how much you get back every month if you invest these amounts. Yeah, I think with 100,000 and a 250,000, you can pretty much do the math. The formula is super easy, friends. Take the amount you've invested, times it by 16%. That'll give you your annual return. Divide that by 12. It's as simple as that. No other complicated waterfalls or splits or anything like that. It's just straight cash on cash. As you can see here, you've got to leave the money in there for 2 years minimum. You can leave it in there longer, not a problem. They'd love it if you left it in there longer, and I'm sure you would too. And at the end of that 90, or I'm sorry, at the end of the 2 years, you give me 90 days notice and I can get your money back. So I would like you to imagine this kind of like a 2 year CD that pays 16%. And then you have to give 90 days notice to get your money back. Now, this is not FDIC insured, so I'm not saying that, but that's the way this thing pays. You leave the money in there for 2 years, it pays you 16% cash on cash. Full stop, friends. Those are the returns. So, I didn't say this earlier, friends, but if you have any questions, please put it in the Q&A. I'll try to get to them throughout the presentation, but I'll definitely pause at the end and make sure that I've been caught up on all questions that I wasn't able to get to throughout the presentation. So now, let's talk about why and how your money is safe, right? Protected. Let's protect your cash. So the first thing is these loans are going specifically to pilots, right? They're student loans only for pilots. Why? Why student loans for pilots? Well, as you can see here, the aviation industry is set for some major changes. Boeing is predicting rising demands for pilots and technicians all the way through 2042, right? So huge demand for 15 years or so. The expansion is driven by global aviation and passenger traffic, and so now is the time to really invest in this type of investment. There's a global pilot shortage. If you remember back during the big pandemic we had a few years ago, they forced several pilots to retire early, and they already have to retire at a pretty early age, in my opinion. And these pilots are just getting forced out. So there's this big gap, you know. The other thing is getting financing for a student loan for a pilot or a flight school is extremely difficult. Most of the student loan organizations don't know how to underwrite them. They don't know how to service them. They don't know how to take care of them, right? So you have people like Brandon that know that industry super well, and they can help protect your money. Okay, how do they protect your money? Well, first of all, the average financial profile of the borrowers is huge. You can see here, average 758 FICO score. You guys, most banks and things will loan to anybody over 650. 84% of their borrowers bring a co-borrower. They also $88,000 is the average loan size. I'm sorry, I misspoke. 79% co-borrowers, 84% of their people that get a loan graduate, which is one of the highest graduation rates of any loan provider across the country. This says they've been in business over 4 years. They've actually been in business a little over 5 years. I need to update this slide. They were founded at the end of 2020 and have done a ton of loans since then. I have a slide in a minute that talks about every year how many loans they've done. They've originated well over $100 million of loans, and they have an 86% performance rate, which is absolutely phenomenal. You guys, this is, as I mentioned, a high yield debt fund. It pays 16% cash on cash, paid monthly, consistent income to you. And one of my favorite things is this section right down here in the bottom, uncorrelated risk. I've been talking a lot lately about correlation and how that is something that you really need to pay attention to in your investments. Now, guys, I didn't look up the exact numbers here, so give me a little bit of grace when I tell you this story. But Google is something like 20% of the S&P 500. right? And so what that means is if Google drops 10% just by itself, nothing else changes, then the entire S&P is going to drop 2%, right? But that's not what happens. If Google drops, you know, 20%, the rest of the market's going to follow suit because they're very, very highly correlated. So even if everything else in the market is amazing and Google drops by a giant amount, the S&P is probably going to drop 10% roughly. I didn't run the exact math, but it's going to drop roughly 10% on its own because they're so highly correlated. If one goes down, the other goes down. Well, also if one goes up, the other one goes up. This is a completely uncorrelated asset. It's going to pay you flat monthly returns every month, regardless of what the stock market does, regardless of what real estate does, regardless of what Bitcoin does. It's a consistent payout every single month. So, another thing, risk mitigation, right, is the manager alignment. If you read this section on number one here, what it'll tell you is that the main partners, there's three main partners in this fund, they have personally funded over 25% of the capital. That's huge. Usually in syndications and things, I see five, sometimes I see 10%, but 25%, that's a massive GP investment. This is a long-term fund. Their goal is to be around for 50 years, and they have a ton of risk mitigation practices, which we're going to dive into in just a few minutes, right? As I mentioned earlier, the main things you need to make a decision on in this is who's running the deal. Brandon is one of the best fund lenders I've ever seen, and the returns, 16% paid monthly. The rest of this is just mitigating your risk. So they have a detailed underwriting process that they actually have, three different phases on, and we're going to talk about these phases in detail. But they first underwrite all the flight schools, so they won't lend to just any flight school. They lend to about half the flight schools in the nation, and then they underwrite the individual that's borrowing it, and they actually create their own score. You see this Stratus score right here, and it's based on these three things, right? So their FICO score, regular credit score, their assets, and then their current income. And they have a mathematical formula that they use to marry those together to come up with their own proprietary score. So let's talk though about the flight schools and how they underwrite those. So they actually take a couple of different steps to this. So first of all, they have a very strict criteria about selecting the flight school. As you can see here, they have to have at least three airplanes, and that eliminates a ton of them. They have to have a structured syllabus that meets the FAA guidelines, and they have to be approved by the Flight School Relations Department. Okay. And then to take that to the next level, they've actually put a partnership network in place that keeps all of this strong. And they have to re-underwrite everybody every 12 months to keep them in this approval rating. Pretty slick stuff, if you ask me. The pilots have a huge, huge earning potential. There's a few numbers on this slide. The average pilot in 2024, the median pilot, excuse me, received over $225,000 a year to get paid. And now that being the median, that means that half get paid more and half get paid less. But you can see right down here, there's a huge slosh of pilots that are working for the major airlines. They get paid over $700,000 a year. So these people have huge incentive to pay their loans back. And the demand is growing, growing, growing. Now this slide's kind of hard to see, so I want to show you. This is month applications for flight school that Stratus has received by month. And you can see the little ones here. That was like 2024, right? Not very much. And then these dark blues, right? That was like 2025. I think maybe I was off, 2023. Anyway, there's 4 years here, and you can see this is 2025, the big number, the last year. Tons, huge, huge, huge numbers of applications that they've been receiving for flight schools. Now, you guys, they don't approve everybody. In fact, there's another slide where it talks about it. So I don't want to misquote the exact number, but it's somewhere under 10%. I think it's like 6% of the applications actually end up getting approved because there's such a huge demand. So, you guys, this is the slide where I talked about it's going to show you the loans that they originated. Just to reinforce that demand, you can see here in 2021, they originated $700,000 in loans. Not a lot, right? But in 2023, they originated $7 million in loans. That's a 10x increase in the number of loans that they originated. And then the next year was 40,000. 2024 was 64,000. And in 2025, it was 91,000 alone, right? So the demand is absolutely massive for these loans. But what happens if we loan somebody money and they don't pay their bill? Well, the cool thing is, first of all, I think I missed this section a minute ago, but they don't loan somebody all the money at one time. I told them told you it's $88,000 was the average. Well, what they do is they pay the money directly to the school and they pay it as it's earned. So like monthly payments to the school. So if somebody doesn't pay their payment, the first thing they do is a funding suspension notice, right? So they're not going to send any more money, right, to the school. Next thing, obviously, they have past due letters and stuff like that that they send out to people, and then they pause the training. They actually literally say this guy can't go to school anymore until he makes his payments. And then, of course, there are some big late fees and penalties and a collection process if that's needed. But you guys, this is pretty standard loss mitigation practice. You guys, these commercial style loans, this private debt financing is one of the biggest investments in the institutional class, right? So we're talking like big banks like Berkshire Hathaway, JP Morgan, even like life insurance companies. They're investing in this kind of stuff all the time. Specialty finance, it's an institutional class. And in America, we've had like something like $20 trillion that have gone into this private credit market. Private credit is an absolutely phenomenal place to invest. And this one is extremely secure and pays really good returns. I quite like this investment. This is a little bit more detail on how US consumer credit has performed. This line, it's hard to see, but this line right here is student loans. And you see right here, this is the late average days late. How many, I'm sorry, the percentage that are over 90 days late. So 10%. And there's a giant drop off here right after COVID, right? And well, there was a lot of money that got pumped into student loans. I know that, but it's just a giant drop off, and they're not late anymore. Like this whole section is really really low. The only one that's really lower than that is mortgages. You can see right here. So a question about this. No, this is just a comparison. They're not lending money to credit cards or mortgages or anything like that. This is just a comparison to show the different types of lending and how they perform. And student loans are some of the best, right next to home equity and mortgages. A little bit more detail on this. This slide's a little messy in my opinion, but you can see, these consumer finance, bank cards, auto loans, how they compare, right? Even back in 2009 in the financial crisis, there was like a 10% that were 30 days over late. And now we're even on the highest section, which is retail credit cards, they're only seeing like a 7% that are at that lateness. And in my opinion, all of these types of things are going to be paid after somebody's going to pay their student loan for pilot school because they want to go and make that $700,000, friends. That's my opinion. Stratus itself has been in the news all over. I actually removed a couple of slides like this that were showing more and more press releases about them being in the news, but they've been in Business Wire, Monarch. They've been in Wall Street Journal and Forbes, all sorts of articles about this company specifically that we're putting money into. So a little bit of specific information about the fund. It is an open-ended fund, evergreen. They can raise up to $100 million. we've already talked about the 2 years lockup period and that you have a 90-day redemption notice after that. So, you guys, I'm going to back up here. Don't get motion sickness. Hold on. I'm going to go back to the very, 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 very beginning and show the return slide one more time. As I mentioned earlier in the beginning of this webinar, friends, this investment pays 16% cash on cash to you, paid out every single month, 2 year lockup period, and a 90-day notice on the redemption. So at the end of the 2 years, you give me a phone call and say, Senator, I want my money back. Great. I'll give it back to you 90 days later, and then you can go and redeploy it in something else. Or if you want, you can leave it in there and continue to invest your returns. A couple examples here of how much money you'll make depending on which investment that you have. $100,000 pays $1,333 a month, and 250,000 pays $3,333 a month. Pretty straightforward there. So, friends, that's what I have for you today. This last slide here, this QR code, if you scan this QR code, it will take you directly to the page that you need to use to invest. It's a portal for Ascension Wealth Fund. That's the name of my fund. It's hosted on the Avestor platform. If you guys have any problems going through that, you can reach out to me. And if you have any questions, friends, my email address is right here. My phone number is right here. And of course, you can find all the information you ever want to know about me on my website. So I'm really excited to work with each and every single one of you. And I hope that you're interested in investing in this deal because I sure am. I'm putting as much money as I possibly can into this. With that, I only saw the two questions come through throughout this webinar. So anybody have any questions for me? I'll pause and wait while you throw some in either the chat or the Q&A period. Okay. I must have done a great job or a really not good job, friends, because no more questions are popping in. As I mentioned again, my email address is right here. Shoot me an email if you have any more questions. I'll answer them offline and scan this QR code to invest. Talk to you soon. Bye, friends.